Here we have a working solution with comparisons from actuals against prior year, two versions of forecasts, and plan. Variances are shown in both absolute and percentage terms. There are various filter selections, such as period, FX, and layout version. We can also drill down into individual lines and view a decomposition tree. Analyze in Excel is also supported. In this video, you'll learn how to produce an income statement, also referred to as the profit and loss. It's possible to do this using a reusable framework because of the similarities in both inputs and outputs. Indeed, inputs are tightly governed and contain things like credits and debits based on the rules of double entry bookkeeping, and outputs are also tightly governed by accounting standards such as IFRS 1 presentation of financial statements. We're going to cover four key areas. Firstly, we're going to look at a demo. We're then going to go into the core theory. Thirdly, we're going to go and look at implementing your layout. And finally, we're going to look at how to adapt the solution. Let's get started. In this first section, we're going to look at a demo of the end solution. The layout for this demo is based on Microsoft's 2023 published results. The numbers, however, are all fictitious. The first column that we have here is our actual figure. We then have our various different comparisons. In this case, we have four comparisons against prior year, against two versions of forecast, a top-down forecast and a bottom-up forecast, and finally against plan. We then have all the variances against these comparisons, both in absolute terms and in percentage terms. From here, we can select an individual line and we can drill into the detail. So for instance, we can see that net income is plus 391,000 versus prior year. If we select net income, let's drill in to understand that 391k. We do this by selecting the line and then selecting View Decomposition. So here we have our plus 391 versus plan. If we select this, we then get a breakdown by account type, whether it be a revenue account or an expenditure account. We can further click on the revenue account to see which accounts it relates to. So the plus 391, we had an increase in revenue, but we also had an increase in expenditure. The increase in revenue predominantly came from B2B trade revenue, and that's fairly closely split between Europe and the Americas. If we select Americas, we can see that this predominantly came from the USA, with plus 76 coming from Mexico. Let's click the back arrow to go back to our previous page. As well as the decomposition tree, we also have three different period selectors we can choose from. We have year to date, quarter to date, or month to date. For each of these, we can view the overall variance, or we can view the variance according to FX, i.e. isolating the FX component. We do this by retranslating actuals at the prior year, forecast, or plan rate. This allows us to also identify the underlying performance of the business, i.e. the performance excluding FX. We also have various different layout versions. So we have internal versus external, the internal containing the percentages. And next we have the legal entity and region and country. These are bespoke elements, and you can add your own bespoke elements based on how you explain your income statement. So for instance, you might explain your income statement by management unit. As well as the actuals, we can also look at projections. For projections, we have two different versions in this report. We have the full year top down and we have the full year bottom up. Here we're showing the month to date, quarter to date, year to date, and the full year forecast. Let's now go over to Excel and see how we can use the model with Excel natively. Both Power BI and Excel are Microsoft products. Therefore, Excel works natively with the semantic model that we're building, which sits behind the report. Let's see how we can quickly build out our income statement in Excel using this semantic model. First thing we're going to do is we're going to drag on the required fields we need: the layout version, line name, and actuals. Let's select a single layout version. And here you can see that our income statement has been reproduced in full. We could also add on other fields such as our account name and number. Another thing that we can do is we can convert this into formulas which are connected to our semantic model. We achieve this by clicking Pivot Table Analyze, then going to OLAP Tools, and then Convert to Formulas. We now have formulas which we can move anywhere we like, and we can treat them as we would any other formula. For instance, change the background colour. Unlike Excel formulas, these formulas will remain up to date, so if our underlying semantic model changes, our formulas within the Excel will update. They will also obey any security rules. So if I share this with somebody who has a lower level security, only certain regions, they will see a different number. Dynamic data, rather than static data in Excel, means that you don't need to ensure that various Excel workbooks are kept up to date. They're using these formulas, they will all remain the same. In the next part of the demo, we're going to look at security. Security is commonly controlled by the legal entity of the organisation. So for instance, in this example, we have Company Holdings, and Company Holdings has 3 subsidiaries. The security propagates from Company Holdings down to those 3 subsidiaries, and then further down the hierarchy. So for instance, Almeida has access to Company Holdings, and from there on it propagates all the way down. We can use this same logic for other users. So for instance, Clayton's the Finance Director for Americas. Clayton therefore only gets access to Company Logistics US, and his security propagates from there. Finally, we have Hertha, who has access to Company Retail Canada only. Let's see how this works in Power BI Desktop. We're now going to check how the security actually works within Power BI Desktop. So the first thing we're going to do is we're going to select Almeida. Almeida has access to the entirety of the company, so nothing on this report should change. To do this, let's go to the Modelling tab and let's select View As. We'll then select Other User, Legal Entity, and type in Almeida's username. We can see that the report is now rendered, viewing as Almeida, but nothing has changed. If, however, we go down to the next level and view as Clayton, we will see that the numbers change. If we go over to the Table tab, we can see why this is the case. Clayton is restricted to only viewing these 4 companies. This is based on the parent-child relationship that we discussed with the hierarchy. Clayton can view any legal entity with the path 2. If we stop viewing, we'll see all the legal entities now reappear. This is an elegant solution for security because we don't need to give access to every single legal entity and therefore potentially cause issues. We simply need to follow through the path and the hierarchy. To access the various resources that you need for this accelerator, please go to starschema.co.uk. From there, you can click on the Downloads button. You can then enter in your email address and you'll have access to the file location. The name of the folder is Income Statement Accelerator 2025. Click here to access the required files. We're now going to look at credits and debits and why they result in non-additive subtotals. If we look at our line name revenue, we can see we have 2 accounts. These accounts are trade revenue and returns. We can also see that 100 minus 5 equals 95. If we look at our line name costs, we see there are also 2 accounts, trade costs of plus 50 and trade discounts of minus 7, which gets us to our 43. Our gross profit combines these 4 accounts. However, now we see that the behaviour is non-additive, so 100 minus 5 plus 50 minus 7 doesn't equal 52. Let's see how this is working with credits and debits. Our revenue line is a credit less debit calculation. So we have 100 of credits and 5 of debits. the trade revenue account being the credit and the returns being the debit. In contrast, the cost line is debits less credits. So we have debits of 50, less credits of 7, and in this case our trade costs are the debit and our discount is the credit. When we look at the subtotal, this is done as credit less debit. However, when we drill down to the accounts, they're treated as either credit less debit or debit less credit, depending on whether they're a revenue or expense line. So we can see here that positive numbers are not always a good thing in terms of contributing to net profit. So our costs of plus 43 is actually negatively impacting our net profit. If we want to make our subtotals additive, we can do so by making all of the calculations credit less debit. So here we can see that gross profit, trade costs are a credit less debit calculation. However, it's worth pointing out that the trade costs are a debit less credit calculation when evaluated within the cost subtotal. So we get an additive subtotal. However, we maybe add more confusion in that the calculation is sometimes done as a credit less debit and sometimes as a debit less credit. In our dimensional modelling, we're going to keep one column, credit less debit. And we can use this column to calculate credit less debit or debit less credit. And that's because there's a handy mathematical shortcut. We can simply times credit less debit by -1 to get debit less credits. Let's see how this works in practice. On the right hand side we have our fact table. This contains our account, our date and our credit less debit. To the left of that we have our account table. Let's ignore the IS key for now. We have an indicator which is either 1 or -1 and we have an account. Let's select the first account. When we do so, we grab an indicator of 1. This is because this account is a revenue account. We then follow through the relationship from our dimension to our fact, and we return a credit less debit value of 17. We times this by 1, so effectively the calculation remains as a credit less debit. When we select an expense line, we return an indicator of -1. This then flows to the account, and in this case we end up with a credit less debit value of -7. However, we then multiply this by -1 to turn this into a debit less credit calculation. Let's now see how this works with subtotals. So here we have the subtotal gross profit. We can see this goes from income statement key 1 to income statement key 2. So the first thing the calculation does is calculate the from and to keys. Once we have the from and to keys, we create a calculated table to return the two lines that fall between this range. And from there on we can follow the relationship down as per normal. Here we're selecting an indicator of 1 because the max of 1 and -1 is 1. And we're summing up our credit and debit value in our fact table. And we're timesing this by the 1, meaning that it remains as a credit less debit calculation. If we wanted to show gross loss rather than gross profit, we would simply take the minimum of the indicator rather than the maximum. The benefit of this approach, as we will see later on, is that we don't need to rework our model or rework our calculations. We can simply change the inputs into the model and the calculations will work as expected. We just simply need to say where the subtotals go from and to. Now that we've seen a demo and we've understood the theory, we're going to insert our layout into our financial statement template. The current template, which you can download from the resources section of my website, contains Microsoft's layout from their 2023 financial statements. We're however going to delete these and replace them with our own. In this particular example, I'm going to use ExxonMobil's layout from their 2023 financial statements. Let's start by deleting the existing records. Now that I've deleted all of the information out of this template, the first thing I'm going to do is replace the line names with the line names that we see on ExxonMobil's financial statements. I'm then going to delete any excess lines. Now that I've got all my line names in, the next stage involves adding in the appropriate calculation types. The first line, revenue and other income, is just a blank line that we show, and below this we show all our revenues. For this we select calculation type blank. Notice that there's validation on this Excel sheet to ensure you select the appropriate type. The next three are all line items, so let's enter in line item revenue. Now that we have our line items, we're going to deal with our first subtotal. This is for the line total revenues and other income. For this calculation, we want to do a subtotal NCLD, which stands for net credit less debit, because we want this to be a credit less debit calculation. If you want this to be a debit less credit, you need to select subtotal NDLC, net debit less credit. The next line is cost and other deductions, is another blank, so we can select blank again. And the next 8 items are all line item expenses. We then have a total cost in other deductions. As this relates only to deductions, it is a subtotal net debit less credit calculation. We then add in our income loss before income taxes. This is going to include revenue and expense items, so we're going to use a subtotal net credit less debit. Next, we have our first percentage line. This expresses the income loss before income taxes as a percentage of revenue. The next line is a blank, and the next line is a tax expense. We then have our next subtotal. As this is net income, this is a net credit less debit, and we have another percentage, which is expressing net income as a percentage of revenue. We then have another blank line, and then we have an earnings per share. For this, we're going to use another divide, but we're going to use an EPS divide. We have our final blank, and the last line relates to number of shares. In this solution, we support 2 different types, basic shares or diluted shares. If you have another type, such as non-GAAP shares, just use either diluted or basic for now. Now that we've completed the calculation types for all of our line items, we need to show the from and the to. For the line items, this will relate to the accounts that we want to go from and to. For now, we're just using dummy accounts and dummy data in order to get our solution working, and then we will switch out with the appropriate accounts later on. On the right hand side, you can see a table. This contains the revenue accounts, other income accounts, costs of sale expenses, operating expenses, and tax expenses accounts that you can use. You want to ensure that an account is assigned to a single line item. So let's complete the line item revenues first. Here I'm going to say that sales in other operating revenue goes from accounts 10100 to 10130. I'm going to say that income from equity affiliates comes from 10200 to 10230. And finally, I'm going to say other income stroke discounts comes from 10710 to 10720. For the subtotal, I'm going to say that this goes from and to based on the income statement key. In this example, we want to go between income statement key 2, sales and other operating revenue, to income statement key 4, other income and discounts. I'll then repeat the process for all the other line items and subtotals on the report. The final stage is to complete all of the divides. For these, you need to put the numerator in the from column and the denominator in the to column. So for instance, for income loss before income taxes, I want to divide income statement key 16, income stroke loss before income taxes, by income statement key 5, total revenues and other income. For net income loss, I want to divide income statement key 20 by income statement key 5. And for earnings per share, I want to divide net income by the number of shares. We now have all of the logic that we need in order to represent our income statement layout. We're now back within Power BI Desktop. You can download this desktop file from the resources on my website. The first thing you might have to do is to enable some preview features. This is at the time of recording, but these preview features may now be GA at the time you're watching this. So if you don't see them, don't worry. To enable preview features, let's go to File, Options and Settings, Options, select Preview Features, and select the preview features that you can see. Once you've selected your preview features, click OK, and you'll probably have to restart Power BI Desktop. OK, so now that you've got the file open, let's go to Transform Data. Transform Data has opened up the Power Query view. All you need to do within here is to select Layout Base, select Source, remove the existing information, and replace it with the layout from your Excel sheet. Once you've done that, simply click OK, and then you need to click Close and Apply. You now have the layout for your P&L within Power BI. One thing you may have to adjust is the padding on the visual. To do this, simply select the visual, go over to Formatting, select Grid, select Options, and then adjust the row padding. And there you have your income statement layout using dummy data. You can use this as a template in order to replace the tables, and you don't have to rework the DAX or the modelling. You can then use this as a template to guide you when doing the engineering work to bring your data into Power BI. Now that you've got the demo working with your layout, the next section is to engage your stakeholders and understand all the different ways that they want to explain their P&L. Here, there are standard ways that the P&L is explained, plus the custom elements. The standard ways are you explain your journal entry by account. Indeed, this is how you get to the trial balance, from which you produce financial statements. You then have your layout, which is linked to your accounts. The other standard dimension is effective date, because obviously we need to know what date the journals are effective from. Another common element is the posting date. So it's very useful to know not only the date in which the journal is effective from, but the day on which it was posted. Here I've modelled this as a junk dimension, combining it with effective date. This is because typically we want to understand the posting date in relation to the effective date, i.e. show me all postings that were posted between working day 3 and working day 7 after the month was closed. If you want to see more on this, there's a blog on my website. We then move to the custom elements that are relevant to your organisation. These are broadly into two categories. Firstly, uniform dimensions. Uniform dimensions are ways in which all journal entries are explained. So for instance, you might explain all of your journal entries by legal entity or by management unit. So you firstly need to identify what are these uniform dimensions. The next section is to identify any non-uniform dimensions. So for example, you may be asked to produce customer P&Ls. This is typically fine because revenue can commonly be explained by customer. However, lines such as depreciation, amortization, or tax aren't explainable by customer. So you have to decide how you want to treat those. You can use finance approach such as activity-based costing to allocate these items out to customers. You can allocate them all to an unknown customer. It's really up to you, but you have to determine how you want to treat these before you start architecting and modelling the solution. Once you've conceptually agreed how all this will tie together, you can then produce a logical diagram. This is the same as the conceptual diagram, but it contains all of the keys and all of the data types. This then is the blueprint from which you build the physical model in Power BI. So you can take this logical diagram, have a conversation with IT or the engineering team, and determine how you're going to go from your source systems to this end state. This will involve an evaluation of what your source systems are. Thank you for listening to this video, and good luck implementing your solution.